It's Matthew Strauss with the quarterly update on emerging markets and the CI Emerging Market Fund. After a strong rally in 2020, emerging market equities peaked in the first quarter of 2021 before consolidating during the second quarter. Investors' caution had been driven by a number of factors, including the realization that economic growth has peaked in the two biggest economies in the world, that future policy stimulus will not match last year's vigor, and that, most likely, profit growth will also peak in 2021. The impact of subsequent waves of the pandemic in many emerging market countries also complicated the investment environment. During the second quarter, the CI Emerging Market Fund traded marginally higher. But more importantly, the 3, 5 and 10-year outperformance remain intact. During the quarter, security selection returned as the main driver of outperformance. Stock selection in the healthcare and real estate sector was particularly strong. Unfortunately, we underestimated the durability of the commodity rally, and the underweights in these sectors weighed on performance. On stock selection, one of our long-term holdings, Anta Sports, had a stellar performance during the quarter. Anta reported stronger than expected results amid growing health and fitness awareness in China. Looking forward, even though growth rates will slow in China and the US, the two biggest economies in the world are still expected to grow strongly in both 2021 and 2022. Also, the reopening trade in many emerging markets is at its early stages. Lastly, the Fed is not expected to withdraw stimulus in a disruptive way, and a repeat of the 2013 taper tantrum seems unlikely. On the risk side, we are keeping a close eye on the Chinese policymakers, new variants of the COVID virus, and inflation developments in the US. Overall, we remain constructive on emerging market equities.